Hello traders, this is Tradog's weekly video. In this video I'm going to go through daily and weekly charts of DAX index, DAX futures, US indices and their futures as well. So here we are looking at the DAX index daily chart on the left with the levels with untested cash closes with a bunch of labels for swing lows, highs, gaps and so on. And on the right side we are having a blank chart, only important supports are there and marked gaps from January pullback low. Friday market started with another gap up, another true gap opened here, but the gap was closed, and as we can see, market closed inside the previous day candle. Yesterday close here, meaning Thursday close, and that one was tested and gap was filled. Now when we observe this right side here, which I'm going to use now, what can we see? Daily 50 is down there, and this market now is 7.4% away from daily 50. This is quite a lot and bigger distance than previous pushes higher. Also, when we make a fib like this from January pullback low up to the Friday high, thinking like this, what if Friday high could actually, and Friday candle, be a start of pullback? Why would market pull back from here in the first place? Well, not only that market is extended, has a extended run with many gaps and untested closes below, many percentage above the daily 50, but it is also gliding on the upper end of the Bollinger Band, which is something that I have already showed on my X feed, and I'm going to show this again here. But first, to check what S&P did. This is S&P, and they made on Thursday a break above 6,100, which was this here, December 6th high and the previous all-time high. And on Friday they went below that, but closed right at the level, almost 600, 101, so 1 point above the level. This is something that is important. We should closely monitor this for the next week for upside follow through or a failure here, meaning this could be a false break. When we include the oscillators, you can see here how on RSI this market is here on a bearish divergence. Now when we observe Bollinger Bands, which I'm going to show you on futures, so these are US futures, S&P futures, Nasdaq futures, Dow Jones futures and Russell 2000 futures, you can observe that all of them are either right at the Bollinger or making, like Nasdaq, a 3-day consolidation under the upper end of Bollinger, or like Dow Jones gliding in the upper end of Bollinger very similarly to DAX, and Russell similar to Nasdaq, also making a consolidation under the upper end. Now if I include DAX here, this would be DAX futures. You see here how DAX gliding at the upper end, the same thing like it did on December. So Bollinger Band can be a stretchy thing in the strong trending environments. Now when we observe this gliding on the upper end, then go back to the daily chart and observe how much they are above daily 50, how many gaps and untested cash closes are there below. We could say, okay, this market is due to have a pullback. However, that pullback could look similarly like on some of these other markets, when the market makes just a horizontal consolidation, meaning a not a pullback, but a going through time, just sideways, prepping for another push higher. Because at the end of the day, what could happen here? Market could continue higher, market could make a consolidation, then continue higher, or could make a pullback like many times before when they hit the upper end of the Bollinger Band or on exhaustion up move. When we go up a notch higher on weekly charts, this is DAX index weekly chart. I'm showing these two channels for quite a while. The blue one is more than two years old. The red one is more than 4.5, almost 5 years old. And this week we got a breakout. The market is above the upper end of this red channel. Other indices, this is S&P and very important level 6,100. I there. Nasdaq under the all-time high. Russell, which bounced many times in the previous few months from 41,860, also under the all-time high, and Russell is the weaker one, which is lagging. Observe this, which is a uptrust above the previous all-time high. The more time between these two highs, the better this bearish setup would be. And now back on S&P, the space between these two highs is pretty much very small. December, January. So this is something to observe. Also, I think that next week, both technically speaking, where the markets are on pushes on good moves, gaps behind, both on DAX, both on S&P. We could say exhaustion moves are there, not on DAX only, but on some other markets as well. So technically they are at important areas, and also fundamentally next week is going to be full of important data, but also full of important earnings reports. There is nothing much that can move the market on a Monday, although the Lagarde is going to speak. There is Germany for business climate, but that's not all that important, because the most important things next week are going to be on Wednesday, FOMC day. No rate change is expected. Then ECB day on Thursday, where rate cut is expected. US advanced GDP unemployment claims also. Then on Friday, German preliminary CPI, and also very important US core PCI index. And all of that is coming with, for example, SAP, which is the biggest company in the DAX 40 index, is having Q4 and financial year 2024 financial results on Tuesday, and this is before the market opens. So this is in the pre-market on Tuesday, and as we can see here, components of DAX 40, SAP is more than 16.5%. 1/8 of index is SAP. So this can be important for DAX. And to get this link and other important links, you can go here on my website on about DAX, trading.com, about DAX page, where you have some information about DAX sessions, useful links, and the lingo and abbreviations that I use in my material and on Twitter. So one of these links, this is the one that I'm showing now. So about this. And also for the next week, when we speak about these other markets, Tesla, Microsoft, and Meta will all have earnings report on Wednesday after the close. So this is after the FOMC. FOMC first, then Tesla, Microsoft, and Meta. Then on Thursday we are having ECB day, and after the close it's Apple. So 4 out of the Magnificent 7 stocks are reporting next week with FOMC day, ECB day, and US core PCI index. So this week, next week, can really be pivotal. Once again, when we compare S&P and DAX, we can see 3 open gaps on DAX, 3 open gaps on the S&P that closed basically at the breakout point. So this is something to observe there. All of these indices had this kind of extended push higher. All of these indices are at the upper end of a Bollinger Band. So this is something to observe. next week can be pivotal both on technical and fundamental reasons. And when you have both of them, both technical and fundamentals, then that could lead into some bigger moves. So this is something to observe, to see, are we going to have a decent pullback or maybe a breakout to new all-time highs after a smaller consolidation. That would be it for this edition of Stradum's bigger picture video. I wish you pleasant weekend and good trading.